All right, welcome back to our Global Business Report. Nigeria's population of about 201 million people, and the country's rapid urbanization presents a huge opportunity for global retailers. However, its fast-growing middle class makes Nigeria a formidable consumer market in Africa. And joining me today to discuss the outlook for the consumer goods sector and the listed companies within that space is Opeyemi Ani, an analyst at Cordros Securities Limited. Opeyemi, it's good to have you with us.
Thank you for having me.
All right, now let's take a look at the trading on the market today. Walk us through.
Okay, so our market closed up, thank God, for the first time in a while.
Indeed, in a while.
0.75%.
In a while.
I think this was on the back of a late rally in Dangote Cement.
All right.
Other heavyweights that gained today were Guaranty Trust Bank, Nigerian Breweries as well. Other heavyweights lost as well. The market was pretty much down for the whole of the day until the end of the trading session.
What stocks and sectors drove market returns today, you think?
Like I just said, brewery sector, Nigerian Breweries, one bank, Guaranty Trust, and Dangote.
Okay, and we're seeing, not so much movement in the banking sector, as it were, for some time now.
Yeah, I mean, the banking sector, with all the news that's coming through from CBN and regulators, I know it's taken a beating. Guaranty Trust is trading at, lows that we haven't seen in a very long time, making it a very attractive stock, actually. Zenith Bank trading below 19 Naira as well, which, it's below that usual floor of about 20 Naira.
All right. All right, now, on the consumer goods sector, how have the listed companies in the sector began this year in terms of earnings and how this impacted the broader market, you think?
Yeah, so looking at the consumer goods sector, that's down about 23% year to date.
Yeah.
So that sector has actually taken the brunt of the broader market sell-off. And just looking at performance of our coverage universe, we've seen that EPS, earnings per share, has been down 14% in the first quarter of the year, which is not a great start for consumer goods companies.
All right. Now, why does the operating environment seem to be increasingly challenging to the consumer goods companies?
We can pretty much categorize this into three fronts. So the weak consumer wallets, structural bottlenecks, as well as intense competition in that space. Yeah. So if we were to take each, weak consumer wallets, consumers haven't recovered from that, strong Naira devaluation that we saw in 2016. Yeah. That PMS price hike and, the attendant impact of that high inflation that we saw. The structural bottlenecks, most of these consumers are exposed to the ports. So Apapa port is an issue for them. You can't get your goods out of the ports. Yeah. And then we've seen that, momentum has shifted for consumers, from the large listed names that we know into the lower cost producers in the sector. Yeah. So we see that there's a lot of competition in that space.
Yeah. And hopefully the latest inflation figures, which is on a downward trend, might at least give a little bit of impetus on that sector, as it were. Now, on the weak consumer wallet, might the new minimum wage be a catalyst here?
So the problem with the minimum wage is that in theory, yes, this should now boost strong household consumption. Yeah. But implementation is our issue right now. The government is facing revenue shortages. Yeah. Where is this money going to come from? State governments are already owing, owing salaries from the previous minimum wage. Yeah. Now you want them to increase 67% increase in national minimum wage. It's going to be tough. It's going to be tough for them. If we want to be optimistic, if we want to be bullish, we can see maybe December, end of the year, for implementation, maybe at the federal level. But at the state and local levels, we don't see any way they can implement that. In the budget, there's nothing included. I think it's just for the federal leg. I think about 160 billion was approved for minimum wage.
All right, you've just given us a grim outlook there, but that's reality on ground. Very good. Now, so how do companies grow revenues if they can't access or rather increase prices, as it were?
Yeah, pricing ability for them is constrained. So at this point, it's solely a volume play. How much can I push out at this point? So you have to now, look at pricing your products in a way that it's more attractive for consumers. Somebody was talking about sachetization recently. If you're not ready to produce in a sachet, don't come to Nigeria, which is very grim for us. But that is the way you have to, you have to push volumes out. And so what these guys are now doing is that they're spending a lot of money on their route to market. So route to market investments, so you're looking at your distribution, you're looking at your marketing, you're looking at increased consumer engagement.
Yeah.
And this is something that a company like Nestle does very, very well.
Yeah.
You know, Nestle's earnings, even though they're not at the levels that, you know, historical levels, they're still very resilient. They're not declining, just growing at a slower pace. So Nestle is spending a lot of money on, you know, they're being very innovative. You see Maggi has different variations, so there's Maggi for everybody at every price point. So they're being very innovative. They're engaging with their distributors, giving distributors great credit terms, you know, investing in them so that they can push those products out.
Indeed, and they've been around for a long time. Now, let's take a look at this. The government seems quite focused on the Apapa port issue. How do you see that playing out?
So at Apapa Port, there's quite a concerted effort from the state government and the federal government, rather. We saw someone who was at the port recently. Yemi Osibanjo, VP, was also at the port recently. So, you know, what we've seen on ground is that situation where the trucks were all parked on the bridges, that has eased a little bit. There's a 5-lane highway coming on stream. We hope, if we're optimistic, we hope to see that before the end of the year as well. You know, the government is looking at different ways to help ease that congestion. We've seen that at Warri Port. The port is being dredged at Warri. Then, you know, in terms of duties that they pay as well, it's also been decreased at the on-air Warri ports as well, just to kind of incentivize these guys to move product through those ports.
And indeed, there's always been thoughts on the issue of using or underutilization of our waterways, talking about moving goods along that route, at least to ease the congestion and, of course, reduce the prevalence of tankers and trailers parked on the roads. But just to buttress your point, it's still only temporary. You still find them at night moving and still causing the usual mayhem that we see sometime in the day. But for the day thing, it has reduced a little. So in view of that, let's look at other issues. On competition, the market seems saturated. What is the appeal for these investors coming into that region?
So it's consumer staples. People have to buy these goods anyway. And Nigeria's population is always attractive because you can sell and you can push volumes to these large amounts of people.
You can say that again.
So we're seeing a lot of these private equity guys come in and invest. You know, Kellogg's Tolaram came in, invested plan to invest about $450 million in their JV. Longreach, I'm sure, I don't know if you've seen them, they're a Chinese company who are also just built a factory here. South African private equity firm has invested in, a Nigerian private equity firm has invested in Daraju. That's My.
Okay.
And as well, Amcon. So Amcon as well and a South African private equity firm have set up a fund to invest in these consumer goods companies as well.
So looking inwards and making use of our local.
So as long as you can produce at that price point that is attractive to the average consumer, definitely you can push volumes up.
Obviously, the way you just articulated this, there's more focus on the consumer, which there's a lot of business prospects there, and we're seeing that being played out. Very good. Now, so what do you see in terms of earnings for the rest of the year?
So earnings for us really, if I break it down into the food producers and the home and personal care producers. So food is your seasoning, your sugar, your salt, your Maggi and the likes. HPC is soaps, your shampoos, your detergents and all of that. So on the food side, we see that growth will be muted. EPS expectations about 6.3% up on average for our universe. But we actually expect a decline for the HPC producers, about 62%. So that's PZ and Unilever. So we're not so bullish on them.
But they've been around a long time as well. Indeed.
Strong multinationals.
So in the long term, do you see any value in this space?
So what this broader market sell-off has done for consumer goods stocks is that it's created an attractive entry opportunity for you. So these stocks are now trading at significant, they're trading well below their intrinsic worth. So for us, we have buys on PZ, we have a buy on Dank Sugar, on Nascon, as well as flour mills. So we feel that in the long term, like how we always preach to investors, invest for the long term, we feel that these stocks have significant upside.
Indeed, and we'll all be keeping an eye on all of this. All right, very good. Opeyemi Ani, Cordros Securities. Many thanks for your thoughts on these issues. Pleasure having you. All right.